I'm sorry to interrupt, but before we end this video, could you walk us through some of those columns on the right, E, F, G?
Oh, sure.
What do those mean?
Yeah, let me slide over there. This is a little interactive portion of this part of the spreadsheet, and there's one place you can enter some information in, and that's that big 2 in column G. So what this is very similar to the trade distribution summary that we saw on the data tab. And what you're going to do here is enter a number in here that's equal to the number of distributions, or, as I had tried to point out before, understanding what the probability is. So let's look real quick. On column H is the minimum. On column K is the average. On column N is the maximum. And in between are the 1 standard and 2 standard deviations away from the mean, either above the mean or below the mean. And over in column O is the standard deviation. So if you're 1 standard deviation, you just take the standard deviation in column O and add it to the average. If you're 2 standard deviations, you take 2 times the number in column O and you add it to the average. And then if you're on the negative side, you subtract it from the average. Now, the question then becomes is, what's the probability that the trades will fall between the number that we're going to give it, the 2 standard deviations? So let's change that. Right now, 2 standard deviations is 75% probability. So there's a 75% probability that you're winning. Let's go to line 4, the winning trades, right? Well, let me get my highlighter here. Okay, right here on line 4 is winning trades. So there's a 75% probability, here's the 2 standard deviations that we've given it, that the trades will fall between negative $13.80, I'm sorry, this is in points, negative 13.8 points and positive 65 points. That's a 75% probability that you're going to be somewhere in there, and the average is 25. Now, let's say you want to know what the probability, a different probability is. So you might say...
Barry, I'm sorry. Let me ask a quick question?
Sure.
Or point something out. So you've got the 2 in there, obviously. What this means is that 75, remember, we're trying to put the odds in our favor on every trade. And we know that our system is winning 69.5%, 70% of the time based on 650 trades. That's what's in the spreadsheet. And now what you're telling me, based on this study, is that there's a 75% chance that the result of the trade will land between a negative 1380 and a positive 6559.
Yes. So
that means the odds are that trade is going to land in the profit zone a majority of the time. I mean, it's right
Absolutely.
There. It's glaring at you.
Absolutely. Now, if you want to narrow down the standard deviations, you have to enter a number greater than 1. So we'll enter 1.1, and it says that over in the column here in F. It says enter standard deviations greater than 1. So we'll enter 1.1. Well, at 1.1 standard deviation, there's only a 17% chance, that's the number here, that it'll fall between positive 4 points and a positive 47 points.
It doesn't even have a negative trade 17.4% of the time.
17.4% of the time it's between, yeah, it's not negative. It's between 4 and 47, statistically speaking.
That's okay. Close to your edge. I mean, that's close to the difference between 50-50 and the 69.5% winning percentage that the
Absolutely.
System. Very interesting. Another way to look at it.
So we can go to the other side. We can expand the band and go to 2.5. Okay? Now what that's telling us is there's an 84% chance that it'll fall between negative 24. Now we've widened the bands out, right? So we're going to have a larger negative number and a larger positive number. So there's an 84% chance it'll fall between negative 24 and positive 75.
And the interesting thing to note is how the majority of the trades are still positive and above 0 by quite a bit.
Absolutely. That's what that does. It's not something you're going to use a lot, but it's real interesting for those that are a little more mathematically curious, it gives you those boundary ranges or the probabilities between the two numbers where the trade will fall, between the high end of the range and the low end of the range. What's the probability that it'll be somewhere between there, some number on the left and some number on the right?
And that's between the date range that we've searched on the data window. So we could actually look at 1 month at a time and compare how those standard deviation envelopes shift from month to month to month. And that could also maybe reveal some additional insight as to the stability of your trade system.
Sure. And right here in column F, it tells you what the start date and the end date of the trading of the trades that you took were. And as you just pointed out, we can go all the way back to the data tab. Let me let that come up on the screen. Great. And then over here in column A, row 23, over here in row 23, we can enter the start column. And over here in line 25, we can enter the end, not the start column, the start row and the end row. That tells us up here in lines 14 and 16 that it's between September and January. Now, just to show a quick little example on that.
Yeah, let's look at the November trades, for example.
So we want to get the November trades. So in some cases, I just type a number in there. It'll tell me what the date is. But so what we might do is go to date. So let's say we want to go to November 1st. So 11/1 of 2009, and we can see that that's line 279 for the first trade in November, right? Great. Now let's go to another date.
We'll type that into type that in, right? Do you want to type that into 23 so we don't forget?
So line 23 is 279. Immediately all the statistics just changed, okay? And it's looking at November to January, but that's not what we want to look at right now. We want to go to another date. So let's go to, what was it, December 31st?
Let's go to November 30th. Let's just look at the month of November.
Oh, right, 11/30/09. Now, notice it jumped down. Okay, good. It jumped down to November 30th, okay? But we want to make sure we get all the trades in November 30. So we want line 460. Do you see that? We want to catch that last trade in November, because it stopped on the first trade on November 30th. So we'll grab line 460 as the last trade, and we'll type that in there, 460, return. All the statistics just updated. And let me go to the first trade just to get up to the top. Now what happened then, and this is a great way to summarize this, is that there were 154 trades in November. So we can see that number right here. 76 were long, 78 were short, great balance there. 110 were winners, 42 were losers for a 71% win ratio. Okay, our profit factor used to be about 0.47, or I'm sorry, our expectation.
Right.
Yeah, now it's 0.6, so it's actually, that was a great month, you know. Our profit factor went from about, I think it was around 2.7, now it's at about 3.24 for that month. We can see that just during that month, it made $21,460. That's not counting the commission costs, because this is just sort of on the raw trades, not the taking out the costs of the trade, okay? We made 2,146 points. And again, that's a confirming number, because if we take 10, this number here, $10 per point times 2,146 points, we get $21,460. That's how we change it. Now, if we run back real quick, look at the trade distribution. Now, what'll happen sometimes is, look how that that's 1 month, right? You can see that it's definitely biased, definitely to the upside here, right?
Yeah, it looks more like a bell curve, kind of.
Yeah, a little bit more belly-shaped. Yeah, you know, a little bit of a peak here. Mm-hmm. You had a bunch of full, let's call them full-term losses, you know. You had a bunch more of them went to minus 40 in there. Okay.
From a percent point of view.
Yeah, from a percent point of view. So there you go. You know, that the trade distribution looks a little different on a month-by-month basis, but it has a similar type of shape. Then if we go to the long shorts right there, get a little bit better feel. Now here's another interesting point that this brings up. When you only have 150 trades, the statistics aren't quite as reliable as if you had 650 trades in there. So it behooves you to get enough trades in there to really understand the personality of the system And if you only had 30 or 40, TJ, what's that going to tell you?
Well, it's going to tell you that you got to keep working, because it's just not going to give you, you haven't hit the stability point yet of your system.
Yeah, so hopefully it's real clear. The more trades you put in there, then the more stable that distribution becomes, and you have a much better sense of whether the trading system will be stable over time. And that's what you're trying to do with all this analysis, is decide, is this a good system? Am I willing to risk my hard-earned money on this system?
Yeah, exactly. I mean, if we had some other spreadsheets with some data from less effective systems, it would be a good learning experience to take a look at what that looks like, with those histograms, and what that trade distribution would look like. If you had a system that was winning 58% of the time, you'd be able to look at it and determine a lot on whether or not it had a positive expectancy, whether or not it was worth continuing with, or if it would even point to where you might even want to be able to look at improving the system based on the distribution of your trades. Really great stuff.
Yeah. Well, TJ, we've gone over a lot of stuff. We probably went way longer than we wanted to, but hopefully the information we've talked about and discussed here, that the traders are going to start to understand why this information is valuable when they're trying to assess that trade plan.
Well, I think they will, Barry, and I hopefully everybody felt that it was worthwhile going a little bit longer than expected, but I think that is a good time to say at least goodbye to this topic, and on the next topic, why don't we...
we'll probably look at trade performance. Probably go into detail about trade performance.
It sounds like a natural place to go next. So I'm going to shut this one down, and I'll see you over there on the other side.
Thanks, TJ.